Morning, happy Wednesday to you. Do I have my days right? Wednesday? I was a little bit early in the beginning of the week. I was a little bit behind now. I thought Tuesday was, no, I was opposite. I was a little bit behind. I thought Tuesday was Monday. Now I think today's Thursday. Wednesday. Top of the morning to you. Thank you, as always, for joining us us by me and the rest of our members, I guess, in the Tier 1 Trading New York live trading room. I appreciate it. Shout out to you guys watching on YouTube and Trading View, as well as I let you guys in every Tuesday, Wednesday, and Thursday for the first trading idea that we look at. We're going to get started today with a classic. We had some really good discussions yesterday, which I'm excited about. We had some newer traders in the building. New ideas, new kind of to how we do analysis. So we got to explain things. It's going to be even crazier in the next few weeks once we get the emergence workshop going and we have a lot of newer traders in, because it gives us a chance to hear questions, ask questions, and address questions. So for you guys that are veterans, this is the chance for you to kind of show off and really develop your skill of trading even further. I can tell you what, you guys know kind of the hierarchy of how we learn. And, you see something, you retain 10%, or you hear something, you retain 10%, you see something, you retain like 20%. Once you start teaching something, that's when you retain like 80-90% of it. So I would advise that you reach out, help our newer traders, because they're going to ask you questions and you're going to have to think about how to explain it, not just in the way that you understand it, but in a way that they can understand it as well, which is pretty cool. So we got some news on the radar for today. FOMC meeting minutes. These are going to be minutes from the last meeting, so the rate hike. So shouldn't be as explosive as like an FOMC statement, an FOMC press conference or anything like that. The press conferences are usually where the big fireworks happen because of the unexpected and sometimes unscripted nature of the response. But still can certainly be a mover in the market, as again, we're going to have our biggest rate hiking cycle ever. At least that's the projection. And the market's going to be looking to see, hey, is the ship still steady? Are we still sticking to that plan? Has anything changed? So again, I don't expect a lot of fireworks because I already, we kind of already know what we're going to get. But if there's any changes, just like yesterday's Australian banks, right? If there's any changes where we see much more hawkish tone, or especially if we see a dovish tone, that would be the big one that sends the market running. There may be a reaction. If you guys are new, remember that you see the biggest reactions off of news when there's a deviation from the expectation. So if everyone knows that we are aggressively hiking rates here in the US, more signs of aggressively hiking rates isn't really a big deal. It's already been priced into the market. So the biggest thing that would affect the market is if for some reason they came out and said, we're not going to do it anymore, or we're not going to do a 50 point. That's when things would go crazy, because now it's like, wait a minute. We thought one thing and now we're hearing the other thing. Let's go crazy, or let's kind of readjust. So keep an eye out for that normal 2 p.m. time. Real quick, again, we're going to start with a classic today, and I'll tell you why it's a classic. But Orsi has a question on the chat. Says, what are the hours you guys plan to host the usual 3 hour per day? No, it's going to be a little bit different. So we're going to do the emergence webinar is going to be kind of a mix between pre-recorded trainings, so stuff like you see on the site already, and then live room sessions. Right. So it's not going to be your normal kind of workshop where we sit here and do a 3 hour webinar. We're going to give some trainings out on Monday. Then we're going to hop into the live room and do what we do here on Tuesday. Then we're going to hop into some more training on Wednesday. And we're going to hop back into the live room on Thursday. Then we're going to do some accountability sessions on Friday. So what we want to do, Orsi, is one, obviously we want to give all the content that we usually give, but we want to give a lot more practical application. So we may be gearing things back in the live room a little bit, right? Trying to focus on some of the concepts that we covered in the training of the day before. That way we don't really lose people, right? It's one thing if we just cover like, hey, here's how a price chart moves. Then we start drawing on Fibonacci and doing all this weird stuff and lose people. So it may be dumbed down a little bit. But we want to give you guys the opportunity, by you guys, I'm talking about the tier one members, you guys that have been here for a while, to kind of show off as well. Right? You guys are really good at analysis. You guys are really good at helping people. And again, the community is the biggest part of our platform. I think we're good teachers. We have good training. We have a good success record of helping traders become successful, get funded, start hedge funds, all that fun stuff. But the real gem is you guys. I mean, be honest with you, that's the real gem. Like we're nothing without you guys. The community is what makes us different. And for you guys to have opportunity to kind of show off, hey, here's what I learned. Here's how I do help people out. I think that's powerful. So we would like to do that. So we'll see how it goes. Always trying new stuff. But yeah, the 3-hour a day thing, trying something different. But they'll be on the platform the entire time. So you can see them on the chat. They'll have the software so we can keep in touch with them. But all right, let me get a swig of water, and then we're going to head over to, I think it's Canada yen or Aussie yen. These things are I always get these ones confused. They got the same setup on them. I forgot which one is the better situation. I call these the triplets. But give me a second. Let me clear my throat a little bit, because I don't know why I can't keep the phlegm out of my throat lately. And then we'll get back to doing some analysis. So give me a second. All right, so we're going to do Canada yen. And again, I call these the triplets because we talk about correlations a lot. And although most, I don't believe in trading rules based off correlations, I do understand that there are some pairs that move very similarly. And I noticed from personal experience losing $50,000 in a very short period of time. But Canada yen, Aussie yen, and New Zealand yen are typically triplets. They, for the most part, move exactly the same. Real quick, David said, got slapped with my pound yen short. You were right about sticking to my trading hours. What do you know? Every once in a while, I'm right, David. Every one out of every 10 times, I might be right. Ascending triangle worked well too, but every once in a while. But yeah, stick to the rules. A good example of, again, the reason that most traders fail aren't because they aren't good traders. It's the psychological aspect as well. You need both aspects. You need to be really good at trading. You need to be even better at trading psychology. If one is lacking, it's going to be very hard to be successful. You can be a great trader. If you lack discipline, you're done. You can be a poor trader with great discipline, but you'd be bad as well because you're a poor trader. So both need to work. But we're going to start on Canada yen. And this is, right, we've been talking about kind of evolving as a trader a lot lately. And I told you my story of how I went from a reckless gambler who just did everything in the market, buy, sell, no rules, no rhyme or reason, to someone who went on to become a disciplined trader. I had structure. I had a coach that was very strict and harsh. And I started off as a kind of a super conservative trader, right? If you can imagine this being like a pendulum, right? On this side, right, I was super aggressive, right? Have any of you guys started off really, really, really super aggressive? While you're answering that, Edgar says, what are my favorite pairs? I don't have favorite pairs, Edgar. I guess I can go off a recency bias. Whatever pairs are performing the best for me are my favorite. But I just have a strict trading portfolio that I follow. So I trade the same 9 pairs every day. Well, I don't trade them every day, but I look at the same. I have the ability to trade the same 9 pairs every day. So I can't trade outside of my portfolio. So I guess if that counts as my favorite, those would be my favorite, the 9 pairs in my trading portfolio. And if you want to know them, I can name them off, but I don't have a favorite. It's not like, hey, the euro dollar is awesome. I don't really care. Whichever pair is doing the best for the month is my favorite. But I do think you need to have a strict portfolio. Well, you don't have to, but I have a strict portfolio of pairs that I do follow. And again, if you want to know those pairs, just let me know. I can type them in or I can read them off to you. But yeah, this is super aggressive over here, which is where I started, which is where I think most traders start because, again, they're reckless, they're gamblers, they don't know what they're doing, they want action. And when I got structure and humbled by lots of losing, I went all the way over here to super conservative. So I was a CTS trader. We talked about that a few videos ago if you're watching on YouTube. All the time here in the live room, but combined technical score trader where I started quantifying my trading and I needed a very strict occurrence for me to trade. And then what happens, and I needed this because this gave me structure. This allowed me to really work on my discipline. It was basically going from one extreme to the other, being able to do whatever I want whenever I wanted to being able to do barely anything, but really focusing on like, gotta follow my rules, gotta follow my rules, gotta follow my rules. And then as I got more comfortable and obviously better as a trader with experience, I started going more towards the middle where I kept that discipline. But because of my experience in the market and because of my new disciplined nature where I trusted myself more to follow my rules, I was able to get more aggressive, but keep the discipline. And I think this is the sweet spot, right? You can be aggressive with no discipline. You could be super conservative with all the discipline. Then you can start becoming more aggressive with the discipline. I think that's the sweet spot of trading. So the setup that I'm going to show you today is basically the really the only trading setup that I can take back in my discipline days. I couldn't take anything else. This is even before like advanced pattern formations, Gartleys and whatnot. This is the only thing I could take. And you can imagine how hard it was to wait for this because it didn't happen too often. But we're going to look here on the Canada yen. And real quick, let me just answer some of these questions because I'm going to forget. Edgar on YouTube says, makes sense. No entry, no trade. A lot of times people want to force a trade. That doesn't work usually. Yep. Again, rules-based trading. I mean, the thing is like this. Whenever you force a trade or you take something that's not in your trading plan, the question you need to ask yourself is, how do I know that this is going to work? Big picture, right? If we're taking something in our plan, something that is testable, verifiable, repeatable, something that has been back tested, we know that the probabilities are in our favor, and there's no confidence that is greater than that, right? There's no confidence greater than knowing that, hey, I've done all the work in testing this. I know this works. It may not work in this individual setup, but over time it works. Like, you get to the point where you want to see this setup because it's like, in a way, it's free money in a sense, bigger picture, right? You know it works, so you want to take it. When you trade something outside of your trading plan, you don't actually know that it works. Like, you think, you feel you're going off emotion, but you don't actually know that it's going to make you money. So it's like, you think about it from that perspective. Put those, if you want to gamble, go to the casino. If you want to fulfill that need, go to the casino. Don't do it in the markets, right? Don't do it in the markets. David says, what do you think? Look at that. You guys got me off track already. If you guys are joining for the first time, this is what happens. I try to do analysis. These trader people that I work with, they get me off track. We go into some type of trading rant, which usually leads to a sports rant, which always ends at like robot apocalypse or something like that. And then we get back into trading. Do I still trade harmonic patterns? Yeah, I do. Real quick, just catch up on the tier 1 chat here. David says, what do you think of people who stick to 1 or 2 pairs? I feel like you learn to know them very well, but it really limits your opportunities. I don't think it's a problem. So we have a good trader here, David. If you get a chance on the tier 1 chat, talk to Tony, talk to Stuart as well. They both trade a single pair. So my coach, my mentor, first started off by telling me this, right? Focus on one strategy, one pair, one time frame, right? Because if that's the most simplest format. If you can't do that, if you can't trade one pair, and I don't know about the one time frame thing, we can maybe erase that one, but one strategy, one pair. Because if you can't trade one strategy and one pair successfully, how can you do 2? Right? It's like when I had my first kid, right? I had my first kid and we barely knew how to father and parent my first kid. Then we had another. It's like, why did we do that? We couldn't get the first one right. Why do we have another? And now we're in double trouble. So similar to that. But the thing is this, the less pairs you trade, and going back to Edgar's conversation or question about portfolios, the value of trading a portfolio is this, right? So let's say you have a 4-pair portfolio. So you're consistently watching those 4 pairs. You're consistently trading those 4 pairs. You've back tested. You've done all the work on those 4 pairs. How well do you think you know those 4 pairs? You know them pretty well, pretty darn well. And you start to pick up on the small tendencies, like certain pairs, yen pairs respect the 50% fib line more than other pairs, or the euro yen respects the even handles more than the other pairs. You start to pick up on these small tendencies, which allow you, if you're doing the work, to increase your edge and become a better trader. Now, is there the question of frequency? Yes. But there's a few ways you can do that, right? And it all depends about the overall balance. So there has to be kind of that mesh point between strategies and pairs, right? So I'll give you a good example. Darren, right, one of the founders here at Tier 1 Trading, he's the one that invented the cipher pattern. So selfishly, when he decided to trade, He only decided to trade the cipher pattern because I guess if you found stuff, that you only trade the stuff that you find, right? So Darren was trading one thing on one time frame, but he was doing it on 20 pairs, right? Now 20 pairs probably seems like a lot, but is it if you're only looking for one thing? For you guys that are familiar with the daily chore strategy, right? It's a simple strategy. It doesn't happen every day. Do you think it's easy to watch 20 pairs on the daily chore if you're only trading that one strategy? Yeah, right? Because you're clicking, signal, no signal, signal, no signal, signal, no signal. Now let me ask you this. If you were trading 10 strategies, how hard would that be on 20 pairs? You'd most likely be overwhelmed. So there's that balance, right? The more strategies you trade, you should be doing it on less pairs. The less strategies you trade, you can do it on more pairs. So to answer your question, David, yeah, if all you want to do is trade euro dollar, pound dollar, just to name two random pairs, you'll start to know those pairs in and out. You can probably trade them 4 or 5 different ways if you want, because you're only focusing on 2 pairs. Now, if you want to trade 4 or 5 strategies on 20 pairs, now you might get overwhelmed. So it's all about finding that balance. That's a very good question. And just in general, I wouldn't worry too much about the limiting opportunities, because that goes back to quality over quantity. And a lot of traders want to always be in the trade. They want to always be trading, take as many trades as I can. And what you'll notice is that as you become a better trader, you actually start trading less. Every experienced trader I've spoken to, it always goes the same way. They start trading less as they get better, because you really start to dial down on, it's not a question of how can I find as many trading opportunities as possible. It turns into how can I try and find only the best trading opportunities, and you focus on your best ones. So very good question. Late here in the chat, got to get back down into analysis. Like knowing the euro dollar loves triangles, gold usually retraces 618, etc. I would assume you could ask them to do. Okay. Much harder. Yep, there we go. Or said George is at to that point as well. Yeah, less is more. Less is more. But it typically comes over time when you kind of get past that rookie stage of like defining yourself as a trader only if you're in a trade at every single moment. So back to our analysis here, right? Let's go through that IPDE process, that boring, repetitive process. Hey, Bad Wolf Army on TradingView says, what am I doing? Well, trading, talking, the norm. Let's identify. I'm gonna need you guys' help for this, right? What is happening here on the Canada yen? I'm on the weekly to zoom out to give me a bigger picture view. What is happening? What has happened? What are you guys seeing on the chart here? This is the first part of our 4-step process. Identify, predict, decide, execute. I promise you, if you don't have a process like this, and you can name it whatever you want, or you can just steal this one, it is going to be a massive help to your trading, because it is going to be the first thing that keeps you organized. If you are a chart hopper, right? You hop from chart to chart just looking for random things. Trust me, this will help you get organized. But what do you notice? Approaching resistance, yeah. I would make the argument that we are at resistance. We haven't tested the highs of it, but we are at our resistance zone, right? If we bracket it off right here, if we were on NinjaTrader, you'd see a big red box here for our VS1 level, but we are at a previous level of resistance. Last week, we did move up into that resistance and get rejected. Currently, we have an inside week. So all of this week's movement, all a couple of days of it, has been within last week's range. We know that when we see an inside bar, and an inside bar is one that completes completely within the previous bar, which is called the mother bar. We know that an inside bar is a sign of, or what is it? What's the story that it tells us? We're in the stories here. Consolidation, right? We also know that consolidation is one of 2 things. Either it's the market just agreeing on price and nothing happening, or it's one of those mesh points where it is a battle between buying pressure and selling pressure. It also breeds harmonic patterns. You were correct. Well, all types of patterns, but specifically harmonic patterns, right? So we know that price is coming up to a major level of resistance. We're at a major level of resistance, and we're starting to consolidate. So again, we're adding up our CTS score. We can jot down some points. If you use higher time frame confirmation, you can jot down 2 points for major structure as well. Now let's go down to our daily chart. Our daily chart, what do we have here on the daily? That consolidation turns into something else. What are you guys seeing here? We've got a double top, a very pretty double top. We have a clear directional move up. We've got some selling pressure up here, rejecting our price. We've got a retracement off of it. We've got an immediate reaction and a retest of that level. And on the previous day's candle yesterday, we closed within the necessary range to give us a valid double top. So this candle right here, not today's, but yesterday's candle is what gave us the double top. So not still forming, this is confirmed. This is a confirmed double top. So you got your major structure. You got your double top. Real quick, would you not wait for the second top to retest the wick to call it a double top? It does. Yep. So the rules for a double top, and I know you're not, you haven't been through the training yet. I don't want to erase all this, David. But we need to test the highest close, but not close above the highest high. So if I were to draw out a little range box right here, if I never get my box tool correct, there we go. Highest high or highest close, we need to test it. We need to test it. And we cannot close above our highest high, the wick here, because obviously that would be a violation of structure. So this is the zone in which we need to be in for a double top. So this candle right here, again, yesterday's candle, gives us a valid double top. So you've got double top. You've got major structure. Right? You got a CTS of 3 right now if you're adding it up. What else do we have, CTS traders? I'm talking about the real courses, David, not the trial ones, the real ones. But you'll get to that later. Just you wait. You like the trial courses. Wait till you get to the real deal. RSI overbought, right? At another point, looking down our relative strength index right here, RSI overbought 1 point. We can anticipate divergence as well. Second point on the second high. So you're at a CTS of about 5 right now. So this was the exact thing that I needed. I needed one more thing. Because again, I was super conservative. This is a keel in 2010, maybe. I also needed Fibonacci confluence. So I needed a Fibonacci extension from swing low to swing high. I think we may be a little bit short here, but we'll see. I thought we had a 1618. Yeah, a little bit. No, we're right in that zone. 1618 Fibonacci confluence as well. I needed a million things back in the day. Now, again, CTS is customizable, right? So you don't have to stick to the traditional CTS score. That's just kind of a starting point. You can add things to it. Something that a lot of traders add as well for another point, as Raphael mentioned and David mentioned as well, psychological number, and a big psychological number. Not just any psychological number, right? We know 5 O's. 0 zeros are big. You get quarters, or those are quarters and thirds, get a little bit less. They don't matter as much, but 0 zeros are big. 5 zeros are big. What do we have here? What psychological number do we have here right in the middle of things? Probably not a number that humans like more. 10000. Add that to your score, you got a CTS of 6, right? So if you're adding up your CTS score, you know that you have a valid trading opportunity right here. And again, this is what I had to wait for back in the days I just told you about when I was first starting off. It took a lot. So now we need to know the rest. Well, is this a good trade yet? I should ask you guys this. Kind of spoiled it already, but is it a good trade? Do we just take it? We fire it off? Pew, pew, pew. 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 My gun is pew. Yeah. So we need some more things. One, You need a reason for entry if you don't have one already. Now, and for scalpers, not well. Someone on TradingView said for scalpers. This is so it depends on your definition for scalpers. So my definition for scalpers is a lot different than some people I heard. Like, so this is a daily chart. So there's no scalping on the daily chart. When I think about scalping, I'm thinking you're looking for under 5 pips. But everyone's definition, if you want to explain what you mean by scalping, we probably have completely different definitions because there's no way you mean that. But you probably mean for like kind of a short little relief is what I'm anticipating. Just whenever I hear scalping, I'm thinking less than 5 pips. But yeah, but you're probably thinking, hey, short counter trend move, which I would agree with. So a valid double top may also be your reason for entry. If not, you may need to wait for something else. And that something else could be, I know we have a trader on the platform that needs a valid double top and then needs a lower low, lower close after the double top. Some of you guys may need to go down to a lower time frame. If I have valid double top, then go down to lower time frame and look for blah, blah, blah. And we could do that later. But for some of you, a double top could be the reason for entry. So let's say it is the reason for entry. You're trading here on the daily. So that's one thing, right? We know we need 3 things before we ever enter a trade. We need entries. What are the other 2? Pew. Okay, perfect. Yeah. Yeah. Sometimes words like it's weird, like, because there's no common definitions in trading. So sometimes I get caught up over words just because I'm so ingrained on how I think. I'm trying to get better at it. I'm trying to get better instead of being like, no, it's not scalping, you idiot. And be like, we're probably thinking the same thing, but wording it the wrong way. Just like the trader the other day who said the RSI doesn't measure strength. And I'm like, well, when I think of strength, I think of momentum. I think of them in the same thing. But anyway, entries, stops, and targets, right? Because if we don't know our entries, stops, and targets, what don't we know? It's a very crucial part of our trade. In fact, it's a part of the formula of being a successful trader. If you guys don't know the formula, I'll tell you a little bit, right? If we don't know entry, stops, and targets, we don't know our risk reward. And what is trading, right? Good traders are great risk managers. We want to trade something with an edge, a probability that works in our favor. And we want to be great at managing risk when we execute that edge, right? So let's get some ideas for stops and targets. This is where it's always fun because you guys are going to have different ideas depending on how aggressive or conservative you are. So let's hear some ideas for stops. You already know how I do stops. I'm an ATR person. But what are some ideas for stop losses? Even if you know we do this every day, I know this is repetition. This is the gym. This is working through the process over and over again. And at the beginning, you're like, Akil, I know we do this every day. It's the same. And I'm like, exactly. That is the point. And before you know it, you're doing analysis on your chart. You're cursing me out at home. And then you're realizing that you're pretty consistent. You're like, darn it, he did it. I get so many emails. It's kind of weird sometimes, but it's like, yeah, I was doing my analysis and I just heard your voice in my head. I'm like, hey now. Remember Ronaldo? All right, let's go. So let's go stops first. I always like stops first, just because I'm ingrained in working in order. We got someone on TradingView saying 98.85. Can't be 98.85. That's below where we're currently trading at. So can't be 98.85 because we're currently trading at. Am I? No, I could be wrong. Sorry, I'm looking at my. I'm used to having the price line over there. Sorry about that. We're at 98. Oh, well, we are. We're trading at 99.12. So we can't have a stop loss at 98.85. So perhaps that's a typo. Ronaldo says 1 ATR above previous highs. I like it. I'm an ATR person. Our ATR is 107. So we're looking at what? 101. Oops, sorry. We're going to look at an ATR stop. Oh, I shouldn't have moved that line. Sorry. That was my structure line. We'll move this one. Looking at an ATR stop about right above 101s. Right about here. That gets us above that previous level of structure. And again, you could do you could do 1 ATR, you could do 2 ATR, you could do a half an ATR, it doesn't matter, whatever your rule. Yes, I'm looking to sell. Sorry about that. You might. I know people are coming in at all different types of times. Phil on YouTube says ATR above the highest high. Yep. So yeah, definitely above the wick here, right? You don't want to be anywhere below the wick, in my opinion, based on this time frame. If you can get above the previous level of structure, which I erased by recklessly moving my chart, if you're able to get above that, that's a safer level as well. And then you can always actively manage. So those are some good ideas for stops. How about targets? Ronaldo said retest of the lows, I think. Bobby says above 101, even handle for stops. Targets. Someone said it earlier and I shut them down. Let's get some ideas for targets. Ryan says 97.30s. 97.30s right here. V point of the double bottom. Any other ideas or any ideas for secondary targets if you guys are doing double? Again, I'll zoom out a little bit so you guys can see what the lay of the land looks like. I'll put a little note on there for you at a previous minor structure. And then you have your previous next major level of structure right in there. Again, something we can look at as well. We'll bring some fibs on later. Ooh, get in here. See if there's any clues that stand out to us. You can see a volume spike right in here. Right above 98 or 95, excuse me. 95.50s. That's right below that structure level we looked at. 95.50s, 94.20s. You can keep that in the back of your head. If you need any extra confirmation, David says 92 evens. I'm running out of here. Here's one. Sorry, I'm trying to make these the same color for targets. Become somewhat organized. David says 92 evens right down here. Bobby says 93 for secondaries. So he's going to raise your 92 and see your 93 right at this previous level of structure. Anyone else? We got Monster Options on TradingView saying 97.70s. So right up here, a little bit higher than this first level, the peak. Or the valley, I guess I should say. And then second target's 97.40s right at the bottom. Thank you. All right. So now the next step is this. And again, it doesn't matter what your target levels are. Again, I think a good conservative level is going to be right here at the low. I think a good secondary level is going to be that level right above, what did I say, 95s? 95.50s, if you're not going to take this structure level down here. Grab your risk reward tool. And now you want to see if it works, right? You know the entry would have been at market. You know where your stops are at. Start measuring out to your target, right? If your stops are here, if your target is here, you have an inverse risk reward ratio. Not saying that's a negative thing. It all depends on you as a trader. I personally require at least a 1-to-1. So you may have to have a different idea here and a secondary entry. Again, if your stop is this high, not everyone's stop is going to be this high. We're just going to keep this on here. Right? Obviously, if you're shooting for down here, you have a risk reward that's in your favor. So the key concept that I want to get across is that it's not enough just to see a trade and be like, hey, this is a good trade. All aspects have to work. You have to have a good trade per all your technical rules. Then you have to make sure the risk reward is in your favor as well. And that's why we talked about, quality trading opportunities, trading less. What you're going to start to notice as a trader is that many times you'll do all this analysis and one thing will be off. And then you got to erase that analysis and start over again. Sorry, I got a bee in the house that is buzzing around. Monster Option says my stop would be at 99.75. So he's looking at a stop loss right up here on TradingView. Yeah, we'll go down. We'll go down. Sorry, David says, could you go down to a lower time frame to find a better opportunity and trade tighter stops, like drop into the hourly? Um, yes, maybe. So here's the question: what will determine whether we can do that or not? And YouTube trading view, I'm going to kick you out in a little bit before we go down to the lower time frames because we're already going a half an hour. But what would determine if you can do that? Yeah. What does your trade plan say? Does your trade plan say that you can go from, hey, daily, if I get blank on daily, like we talked about earlier, then I can drop down to 4 hour to look for more aggressive entry reason? If your trade plan says yes, then you can. Can you just do it because this doesn't work? Big no. So if it's in your rules to drop down to a lower time frame to find a quote unquote more aggressive entry, then yes, you could do it because you're following the rules of the plan. That's what you should be doing. However, if you're someone that looks at this and you're like, man, I like this, but the stop is too big, I'm going to go down to the 4 hour because the stop is going to be smaller. I'm going to go down to the hourly because the stop is going to be smaller. That's a problem. Because here's one thing you want to remember, right? Your trade is going to differ depending on the time frame you take it on, right? If you're looking at, let's say you're looking at this right here. You're looking at this, or let's take a more conservative. Let's say you're looking at this type of move here on the daily. And all of a sudden you go to the hourly because you want to get a better stop loss. And you go down to the hour and you're like, yeah, I like this trade setup, but I'm going to keep, why did I erase my risk reward tool? I'm going to keep the same ratio here, the same targets here on my hourly, but I'm going to reduce my stops here like that because that looks a lot better. Is this the same trade? This is a completely different trade. Because remember, the whole premise of this trade, right? The premise of trading in general, when you measure out stop losses and risk rewards, right, guys, is you're betting on this. You're betting that price is likely to go here before it goes here. Let me know if that makes sense because we don't talk about that much. But that's the premise. It's not price. It's not that price will go straight down. It's I think price will go here before it goes here. Give me a yes if that makes sense. So if you take that, if this is your trading idea, and you don't have a new, fresh trading idea on the lower time frame, if this is your trading idea, and all of a sudden your stop loss is here, is it the same? Because remember, the original idea was that, hey, price is going to go here before it goes here. This is a completely different trade because now it's, hey, I think price is likely to go here before it goes here. And think about this for a second. If price goes here, has it invalidated your trade in any way? If you're basing the invalidation point to be the highs? No. So now price can do this. You could be right, but you're actually wrong because you lost because you didn't give the market enough breathing room. So those are some of the dangers of going to a lower time frame just to chase the trade. We call it trade chasing. Now, if you have an entirely different idea, different analysis, like, hey, this is a flag pattern consolidation. Once we get the break of that consolidation, then stops go above the high. That's a different story. But it's got to be a fresh idea. So very good question. So we can continue this a little bit. I know there's more questions on time frame, but I got to get the YouTubers and the trading viewers out of here. Thank you guys for joining. You guys are very active today, both on YouTube and on Trading View. I appreciate it. We'll be back tomorrow, same time, 7:30 a.m. Make a note of that. Come join us. Do me a favor on your way out. Hit that like button. Show me some love. It takes like a second. You guys aren't doing it that much. It just takes a second. Don't be lazy, right? We give you a half an hour of goodness. Don't be lazy. Appreciate it. Of course, leave any comments.